Good morning, everyone. Welcome from a slightly chilly London today. The weather is always changing, but today seems to be slightly brighter and on the chillier side. Welcome to another fabulous webinar with our esteemed experts and analysts from the LNG and natural gas industry. Today, we are going to be talking about the post-pandemic rebound and the accelerated growth for the LNG market in line with the Lng Outlook that our teams from Refinitiv have published on Icon that many of you might have accessed, and if not, then obviously you can look into it as well. Just very quickly to introduce the panel that we've gathered today. Anne-Kat Bravik, she is the Director of LNG Research at Refinitiv. You've been hearing her in different reports, webinars, and events quite often. John-Christian Heinz, he's the head of LNG at LPeak. He will join us, especially very popular on LinkedIn, as many of you might have seen his LNG espressos coming out quite often on a weekly basis. So we're pleased to welcome JC today, and he'll be speaking about the market outlooks essentially. Laura Page, she's the lead LNG analyst for us here at Refinitiv. And again, you must have seen her in the Leaders Out of the Unexpected series that we ran with some of the leaders from the commodities industry recently as well. And Wayne Bryan, always a popular speaker. He's the Director of European Gas Research at Refinitiv, and obviously a very popular fellow that we've seen on different webinars, stage events, and everything else in that domain as well. Very briefly on the agenda side, the key topics that we will discuss today will be around the recovery of the global LNG markets. It will be around the expectations of the US shutdowns in the summer. And then obviously the big question about the European ability to accommodate the influx of any surplus on the cargoes that are going to be coming in. So obviously we will have all of the speakers and everyone else speak to you as well. If you have any issues, if you are unable to listen to sound, or if there are any technical difficulties, you will see the options on the bottom of your screen where you can put in as a comment in the Q&A bar, and somebody from our team will be able to help you. Equally, this is, at the moment, you guys would be able to listen into the webinar, but we would love to keep it as interactive as possible. So if you have any questions, if anything is there that you want to clarify, or something that you want to ask from our experts, please do feel free to put it in as a question, and we will aim to answer the questions at the end. If we do run out of time, obviously we have a limited slot within the hour, then we will try to reach out to everyone via emails or afterwards individually with all the answers possible as well. Equally, I think you'll have the ability to manage sound, to see the video of the presentation itself. And also there are a number of materials available within the webinar console that you can read about and obviously learn more about Refinitiv, learn more about our research services. And there are a few interesting research pieces added in there as well. So I would highly encourage you to keep a lookout on the resources section as well to make sure that you can access all the resources available. So with that, I think we try and get everyone. I think JC, just briefly, is going to be joining us in a second with all the background tech connections that he's working on. So with that, for now, I will pass on to Anne-Kat to start with the LNG Outlook session and continue with the presentation. Anne-Kat?
Yes, thank you very much for your kind introduction. And hello, everyone. Very soon we will dig into our outlook for this year, but I think we should start off by taking a look into what really happened to the LNG market throughout the pandemic. And it's interesting to notice that LNG wasn't that hard hit as many other energy commodities, and we saw an increase of about 1.4% in firm demand. By firm demand, I mean demand outside Northwest Europe. But there are some significant variations between the different countries. And here we see the price development here of the Northeast Asian spot price, TTF and Henry Hub. And of course, we notice the very low levels on the Northeast Asian spot price are dropping down to record lows during May, before then spiking at record highs again in January. That's really, really something, what a volatility. But now let's go on and take a look at the supply and the demand side, how they've been faring. And I start off here with the supply. And on the graph to the left here, you see the remarkable slowdown, that's the red line here, for the second and the third quarter. And this is reflecting feeble demand situation in the world and also the depressed pricing environment. And then you see the graph here to the right hand, almost a reflection of the total supply. And that's US exports on a monthly basis. And we see this enormous drop during the summer, where the US was really taking the brunt, with 160 to 170 cargoes being cancelled as US export economics for uncommitted cargoes dipped into negative territory. But we also saw some decrease from other suppliers, like Egypt, for instance, who is exporting all of their LNG onto the spot market. They almost ceased exports during the second and the third quarter. And also we saw some reductions from Malaysia and Indonesia and a couple of other exporters. But then let's take a look at demand. And here I've plotted monthly year-on-year change in LNG imports to Northeast Asia. And this is kind of impressive. See here, plus 2.5%. But also here we see a significant slowdown, particularly during the third quarter. But also we see the spike here in January this year, when freezing temperatures were sweeping across the region. Also, it's interesting to take a look at the country splits. Here you see China and Taiwan is a similar chart with a year-on-year change. And here we see they've been doing phenomenally well, plus 11% for China and 8% for Taiwan. But we notice that they start the year on a very weak note as their governments enforce very tough lockdown measures. But then we saw a relatively rapid economic recovery supporting gas demand. And for China, LNG demand was further supported by dropping, kind of surprisingly, pipeline imports to the country. And Taiwan was supported by the government's persistent coal to gas switching in the power sector. And then taking a look at South Korea and Japan, here the picture is not that rosy. But we see here that South Korea was doing pretty well in the first quarter. Here, the government decided to temporarily close numerous old coal-fired plants and limiting the running time for existing coal-fired plants, boosting LNG imports. And they're doing the same policy this year. But then we see a significant drop here in the third quarter as lockdown measures were taking its toll on the South Korean economy. And for Japan, we are down 4%, but this could have been much worse. I mean, according to the IMF, the Japanese economy contracted by about 5% last year, but LNG imports were supported by some extensive nuclear maintenance going on throughout the year. And at the end of the year, just 2 out of 9 eligible nuclear plants were operating. Not exactly the best situation to be when you have a power sector being stretched to the very limit. And now we're looking to South and Southeast Asia, and this does not look that bad. Laura, can you please take us through the rest of the world here?
Yeah, thank you, Anna-Kat. Yeah, so like Anna-Kat said, South Asia didn't do too badly last year and grew by nearly 5%. And it's really important to note here that this region is quite price sensitive, so they do respond to changes in the spot prices in terms of their imports. So you can see in the first quarter, we had quite strong growth actually. So spot prices were below $5 mark due to the mild winter. So that really increased LNG imports into those price sensitive countries. We did have the lockdown measures in April and May, which did weigh on demand. But then we did see a really nice pickup over the summer, actually, when spot prices fell to record lows, so the $2 marks that we saw during the summer. There was a bit of a reversal at the start of this year, though. As Anna-Kat mentioned earlier, we did see record high spot prices, and we saw demand reduce in those price-sensitive countries like India, Pakistan, and also Bangladesh as well. So when we look on a country basis, there are some differences that we see, though. So India, very price-sensitive, grew its demand by 9%, and that was due to the low spot prices, but also we did see quite weak domestic gas production in the country, so that shift towards LNG. Thailand saw very impressive growth as well, and they grew by 12%, and that was also due to weak domestic gas production, but also they saw lower pipeline imports from Myanmar, so again, a move towards the LNG market. However, gas demand was pretty weak in Pakistan for most of the year until the fourth quarter, so they dropped their LNG imports by 9%. So some differences that we're seeing between the countries. I'm now going to take a look at Europe, and I'll start off by looking at Europe excluding this Northwest European balancing region. So quite strong growth that we saw in the first quarter. So Spanish demand was very strong then. They're the biggest importer in the region. But then as we went through the second quarter, we saw those lockdown measures come in, and we saw lower supply from the United States as well. So we saw a reduction in LNG imports. And we reached this inflection point around the middle of the year, so June time. In the second half of the year, we saw a switch from LNG to pipeline imports, particularly those oil-linked pipeline imports. So the likes of oil-linked pipeline imports from Algeria into Spain and Italy, and also Russian gas into the likes of Turkey and Poland. So because the oil prices dropped quite significantly in March and April, that really fed through into those oil-linked pipeline contracts in the back end of the year. So we saw that switch there. So again, like I was mentioning, Spain did well at the start of the year, but then we saw a switch towards Algerian gas, and the same with Italy as well in the second half of the year. So they dropped their LNG imports by 5% and 12% respectively. But it really wasn't all doom and gloom. Turkey had a really promising start to the year. And you can see here in May, they increased their LNG imports by 170% in May alone, which is really significant. Again, strong in the start of the year, but then in the back half of the year, they made a move towards Russian gas, which was cheaper than LNG. But overall, they increased their demand by 21%, which is really promising. Now here, this is Northwest Europe region. So this is really the traditional way of balancing the market. So pushing those excess cargoes, those uncommitted cargoes into this region. And here I'm talking about UK, France, Netherlands, and also Belgium. So it's really not a surprise to see that there was strong LNG imports into this region at the start of the year. So we had a mild winter in the first quarter, and then we had those COVID lockdowns when many Asian buyers were diverting their supply and trying to push their supply to later in the year or declaring force majeure. So that excess supply in the market then pushed into this Northwest Europe balancing region. As we went through the summer, we had those US supply curtailments as well that Anna-Kat was mentioning earlier. And then when we got to the winter, we had a very cold winter. So particularly December and January were particularly cold in Asia. So Asia was the premium market, and everyone wanted to try and get those cargoes to meet Asian demand because that was where prices were just so high. So we saw a real reduction in supply to this Northwest European balancing region because of that tight market situation. But now, as we're moving into February and through to March, we are seeing a pickup in arrivals to Northwest Europe. We're coming out of this peak winter demand season as well. So that typically sees rising supply into Northwest Europe. So we're coming out of this tight situation phase now. So I'm going to hopefully move over to JC, who is online now, and he's going to summarize where we are at. JC?
Can you hear me?
Yes,
Hello?
We can hear you.
That's fantastic. I apologize to everyone. My laptop decided to do something I didn't really like, but now we are connected. So welcome and thank you for this very insightful presentation so far, for this 2020 wrap-up. We are now willing to understand where this market is going. And of course, it is all about LNG demand. It's all about recovery from this COVID pandemic. It's quite obvious that the pace of recovery is going to vary depending on the regions. Some people will say South Asia or Asia in general is already out of the woods. And Europe might take a little bit more time. To be honest, I think we have to be humble and stay very prudent on all these assumptions. If we move on to the next slide and we see what is yet to be addressed in this presentation. Next slide, please. Yes. So 2021 is all about demand. It's all about the outlook in terms of recovery and new entrants in new countries. But we also will cover the supply outlook, which looks like it's more straightforward, but can also embed a few surprises. And we'll end up doing the market balance, a little bit of perspective on the summer, and the Q&As. So I hand it over back to you, and I'll find you back on the Q&As.
Okay, thank you so much, JC, and I'm really happy you could make it. Good to have you with us. Yes, we do expect demand to grow, in fact, by 23 BCM outside Northwest Europe, or 5%. That isn't that bad. As a general backdrop, the IMF just updated their view on the global economy in January, and they upped their forecast to 5.5% for this year. And that's really good, and that compares to a contraction of about 3.5% last year. And we see here that China is the main driver, and we expect LNG demand to increase by about 9% or 8 BCM. So the prospects for gas demand as such is really good. We expect the economic recovery to be sustained, and also Beijing has the ambitions to extend the blue sky policy, the gas to coal, or no, the coal to gas or coal to electricity switching that typically has taken place in the household sector and also industry sectors to cover the entire country. all provinces. And this has been moving up on the agenda quite quickly. As you perhaps recall, last year, China pledged carbon neutral in 2060 and peak carbon before 2030. So they have lots to do here. So it's all good news on gas demand as such, but we expect LNG to face some competition from pipe. And first, take a look here. Pipeline imports were down last year. And you see a year-on-year change on a monthly basis there in Turkeys, and the blue one is LNG imports. And last year you had a decrease of about 2.5 BCM, and that despite we saw a ramp up in the power sub-area. The pipeline coming from Russia with Gazprom volumes into the eastern part of China, and the pipeline system has already reached Beijing. And for this year, we expect the power sub-area to continue the ramping up, and they will reach about 10 BCM of gas in the pipeline system. And there are also some uncertainties on what will happen to Turkmen volumes. They were significantly down last year, and that's one of the uncertainties attached to the forecast here for China. What will happen with pipeline imports from Central Asia? But for this year, we expect pipeline imports to China to grow by about 5 BCM, then eating more into LNG demand than we saw last year. So while pipeline imports can be seen as one of the main uncertainties attached to Chinese LNG demand, in Japan, it centers around nuclear availability. And you see here we are down on Japan about 2% or 2 BCM. And here then away, two factors going against each other, pulling in different directions. We expect the economic recovery to gather pace, and it looks like it is improving now in Japan. And this will, of course, support demand for gas from the city gas sector, but also power demand. But on the negative side, we have nuclear availability. And take a little look at this chart here. And the blue line here is then depicting the nuclear availability, and the turquoise here, the production forecast. And as of today, about 4 out of 9 eligible nuclear reactors are producing. But during the next couple of months, an additional 4 will come online, and that could be a challenge to coal-fire, gas-fire power plants. But in addition to those that have gained the full approval to produce, 6 reactors which has not produced since the closure of all the reactors after Fukushima have now applied to restart. They've all got the necessary approval from the Nuclear Regulation Authority. But what they also need approval from is from local and regional authorities. And as we have seen in the past, that can be a very cumbersome and lengthy process, and particularly to get the local consent to restart, as the population in general is not very happy with nuclear reactors. And in fact, I got a little reminder earlier in February when you had an earthquake in the sea just outside Fukushima. So, but in this forecast, we anticipate that 2 of those potential 6 can come back in operation in the 4th quarter. If they don't, it will look slightly better on a forecast for Japan. And then let's move to South Korea, just a slight decrease. Also here, it's some of the same picture as for Japan, we expect to see recovery in the economy. But also here, our gas will face competition in the power sector. 3 large new coal-fired plants will restart this year. In addition to that, the delayed nuclear reactor, the Shinhanul number 1, will start sometimes this summer. So all in all, a slight decrease. And then to Taiwan here, we are positive, and the economy is doing quite well, and the government is quite persistent on its coal to gas switching in the power sector, and that's in order to combat the air pollution. And then next out here is India, and I think I leave that to you, Laura.
Thanks again, Anna-Kat. So I mentioned earlier that the South Asia region grew by 5% last year, which was pretty promising given everything that was going on. And really, we expect this region to grow much stronger in 2021 by 13%. And that will be really led by these 3 players here, India, Pakistan, and also Bangladesh. Now, some of these players actually reduced their LNG imports in the first 2 months of the year, in January and February, when we saw record high spot prices. But we do expect a recovery through the rest of the year as the economic recovery gets underway. So in India, we expect to see 8% LNG demand increase. We expect to see some government policies to support gas demand in the country, and we also continue to see strong demand from the fertiliser sector as well. We could also see 2 new LNG import terminals coming in this year, so Jaigarh and Jafrabad as well, so keep an eye out for those. And we expect to see higher utilisation from the Kochi terminal as well after a new pipeline was installed last year. So quite promising demand from India. Moving on to Pakistan, we also expect demand to recover there after the weak demand that we saw last year. So remember, I said earlier they declined, they had a decline of 9% last year, but we expect that to return to growth. We have economic recovery, but also declining domestic gas production there. So there should be a move towards the LNG, international LNG market. We also have a couple of private companies that have been given authority to import through their 2 LNG import terminals, which really could boost utilisation rates there. When we move over to Pakistan, again, we have growing demand from the industrial and the fertiliser sector as well, quite stagnant domestic gas production as well, and that is expected to decline over the coming years. So expect to see Bangladesh move into the LNG world more over the next couple of years, so could be a big player. I've also picked out Kuwait, which is quite an interesting one for this year. So Kuwait are making quite a big move from oil to gas in the power sector. And even though they are trying to boost their domestic gas production, that really won't be enough to meet the demand. So we expect to see more LNG imports this year. And that really coincides with the startup of the Al Zor LNG import terminal any month soon. And that terminal is really large. It's 30 BCM per year. So that will supplement, help to supplement their LNG imports into Kuwait. America's a return to demand, but also a little bit of a mixed picture when you look into it on a country basis. We expect to see stronger demand from Brazil this year. So they hardly took any LNG import cargoes through the summer last year because of the COVID outbreak. But we expect that to return to growth as the economy recovers. Also, there are a number of new LNG import terminals that have started up recently, so they will ramp up capacity. Important to look out for hydro stocks there. So we've seen quite a drop in hydro stocks over the last couple of months. So definitely keep a lookout for that. Conversely, though, Mexico is expected to reduce its LNG imports quite significantly by 60%. And that's as US pipeline supply continues to ramp up and push Texas gas into Mexico. So they'll move away from LNG towards the pipeline gas. And as I mentioned earlier, when we looked at the Europe, excluding Northwest Europe region, they saw quite flat LNG imports last year, but we expect that to return to growth, again, economic recovery as well. So when we look at some of the players in this region, we see Spain as being quite promising, so expect an increase there. If you look at the others region on the end here, we have Croatia, which is a brand new LNG importer. They started up their first terminal at the end of last year, and we expect that to ramp up through the course of this year, potentially taking as much as 1.5 BCM. Really interesting to note that Hungary will also import LNG on behalf of Croatia as well. So definitely keep an eye on how imports into that region fare. However, we do expect declines in Italy and also a small decline in Turkey as well. So one development is the TAP pipeline, which will bring Azerbaijani gas into Italy this year, and that is expected to ramp up through the course of this year. So we could see a decline in Italian LNG imports for that reason. Also, Turkey, like I said earlier, had a really good start to the year last year, but we don't expect to see significant growth this year. Russian gas has been much cheaper than LNG in the first half of the year, so we have seen a decline in LNG imports as the year has got underway. So yeah, a small decline there for Turkey. So we'll now move over to Anna-Kat, who will go through the supply side. Anna-Kat.
Yes, thank you very much, Laura. And for this year, we expect supply to grow by 35 BCM, or slightly more than 7%. And as you see here, it's the US, which is the largest contributor. But let's start off with Egypt and come back to the US in a minute or two. And here we expect to see an increase. As I mentioned earlier in this presentation, that exports from Egypt almost ceased during the second and third quarter due to the depressed prices for spot LNG, and we expect to see somewhat higher price level this year, making it interesting for Egypt to keep on exporting. And also last week we saw 2 cargoes coming out of Damietta, the second export terminal in Egypt, which has been closed since 2012. So that looks promising. And if we then move to Australia, also here we expect to see some increase, and that in a couple of months we expect that all 3 trains from Gorgon will operate on a more sustainable phase throughout the summer. They have been troubled a lot by different technical issues. And also in Australia, the FLNG Prelude has restarted production after having been offline for about 1 year. And then in Malaysia, they've reduced their exports slightly last year due to the low price environment. So somewhat higher spot prices, we think there will be somewhat more coming out of Malaysia. And also they started production at the small PFLNG Dua. And then Jamal, also tiny little increase, and they will soon start the 4th new mini train that will up the volume coming out from the Yamal Peninsula. But Norway, we are down, Hammerfest LNG encountered a fire in September, so the entire plant had to stop producing. And according to Equinor, they should be back in operation sometimes around October this year. And we are also down on Trinidad and Tobago, and it's not new, but they're then struggling with feed gas supply. And in fact, train number 1 here at the plant has been put into so-called maintenance. I will most likely be there in maintenance for the rest of the year. Potentially, it can restart early next year. And also down on Algeria, it could be that we'll be able to keep up the gas production, but here domestic demand is growing quite rapidly, and that may most likely eat into the availability for exports via both pipeline and LNG. Then back to the US. So what have I plotted here? In the bars here, you see monthly exports from the 6 different facilities or export plants in the US. And in black, you have the utilization rate. And last year, we had a utilization rate as low as 66%. That's utilization of the total capacity. And we expect the utilization to increase to about 80% this year. This has to do with the recovery we're expecting on the demand side. But this is still below the utilization rate of 2019. That came in at about 84%. But here we should bear in mind that we saw some significant capacity additions in the US last year, despite just a 15 BCM or 16 BCM increase in exports. And you see from the graph here that I've depicted a little dip here during the summer. One thing here is maintenance. Another thing is that I would like to point to the possibility that we may see some cargo cancellations also this summer, but far from the magnitude as we saw last year. That's to a large extent has to do with the uncertainty embedded into our LNG forecast. But let's take a look at the US export economics. This looks really, really good. Let me just try to explain a little bit. The blue area here is the feed gas costs plus liquefaction costs. So Henry Hub plus 15% of Henry Hub. This is typically the example from Sabine Pass. And then the orange is the voyage cost, but I've been looking into the futures for charter rates. And then we have the forward curve for NBP and TTF. And you see here, there's really a nice margin, something like $1.3 to $1.7 per MMBTU. But we know that the forward curve is necessarily not a good forecast for where this price, the NBP and TTF, will be delivered, nor where it will trade the month leading up to the delivery month. 1 year ago, at this time, we still saw a positive margin for US exports to Northwest Europe. It was a very slim one, though, but that disappeared during the springtime. It just evaporated and ended into negative territory. So here we should bear in mind then the numerous risks to the LNG forecast as such. And another key element, which we will soon touch upon, that is the robustness of the European gas market and to what extent, particularly Northwest Europe, has the availability to absorb relatively large volumes. But before we go into that, Laura, could you please do some summing up of the market balance?
Yes, I sure can. So when we summarise today, we're looking at demand growing by about 23 BCM this year, which is around 5% and much stronger than we saw last year, which was around 1%. On the supply side, we expect a 35 BCM increase in supply, which is around 7%. And it's important to note here that we are looking at US supply as well, so paring down US supply when the market's too strong. So when we put the demand side and the supply side together, we see additional oversupply of 12 BCM this year, and it'd be really interesting to see if Northwest Europe can take this volume of LNG. I'm going to pass over to JC now, who's going to make some comments on this, and then we'll move over to Wayne to look at the European gas market.
Thanks, Laura. Thanks, Annika, for this material. It's really packed with information, as one could expect. This is indeed going to be a very interesting test for the market. I would say an elasticity test. First for the LNG market in general, then for the US producer in particular, US producers, but maybe also for Panama Canal. As you saw, there's a bit of a congestion there, which is restricting the possibilities of exporting the LNG to Asia. Anyway, I think that's creating a land of opportunities for also new players, not necessarily Swiss-based, but including them. And now the big question is, can Europe take this extra supply? And how about we ask Wayne about that?
When you might be on mute, the famous sentence since the last year.
Thank you. There we go. Thank you.
Go ahead.
Sorry about that. So yeah, thanks for your insights, guys. Really, really valuable and feeds well into what I'm about to talk about in terms of European gas outlook for this summer. And I've only got 10 minutes here, so I'll try and move through my slides in an orderly fashion. But first, I'll just literally go back to last year. This time last year, we were going into the summer season in a lot better shape in terms of European gas. Storages were close to full, close to around 300 terawatts as we came out at the end of the winter season. Very different story ahead as we come out of this winter season. LNG, of course, we were seeing in January, February, March, huge amounts of LNG coming into Northwest Europe. And of course, we had COVID as well. That led us into the summer, where we all know what happened there with the oversupply. We saw TTF prices on the day ahead at around €2, and we also saw the front month at about €3. This incentivized the cancellations, and then as we then exited the summer, we then started to see the market really start to rally. And of course, as we see here, the surge in demand, supply constraints, exorbitant charter rates, pushed up prices to such levels that dragged up TTF and MBP curves. Looking at Asia, we saw the big jump in demand there. I think Chinese demand was up around 10% year on year, and Asian LNG imports up around 20%. That had a profound effect on our markets, and our markets started to rise. We also experienced a lot colder weather than we anticipated. European storages really took a hammering over that period. I think up to the end of January, we took about 20 BCM out of storages. Move forward to now, what we've seen now is the lack of LNG has driven our prices to be a lot higher than where they were last year. We've also had weak nuclear availability in Europe, lower wind supply, and of course COVID. Despite COVID actually having an impact on industrial demand, let's just not forget that most people were working remotely. And when the weather has been cold, of which it has been of late, we've seen LDZ demand way above 3, 4, 5-year averages, which makes sense. So now what we're seeing as the last couple of weeks, the prices have started to trade back down. And again, that's thanks to LNG. We've had, especially in the UK, actually, we've had quite a lot of cargoes with US molecules. We've had about 20 so far since the start of January, which obviously wasn't looking that prospect at the start. But as we've moved towards the last 6 weeks or so, we've seen a big rise in LNG send-out. Also, today I was looking at our own Refinitiv morning report, and I think we forecast today that European LNG send-out, and that's Northwest Europe, at about 1,400 gigawatt hours a day, which is a lot higher than we've seen of late. So it kind of gives us hope that moving forward that LNG will be able to fill that gap in storages. Looking at the storage inventories, you can see here where we are. We're around this level now, around 160 terawatts. Looking at where we might be at the end of this month now, I was thinking maybe we might end up around the 100 terawatt mark. We're not going to be at 57, I don't believe, which was gas year 17, which was extremely cold. If you look at 18 and 19, we were at very healthy levels. So whatever happens, we are going to be at a much lower level this year. I think firstly as well, we need to take into account that we've still got a month left of this winter season. Last night I was looking at the latest EC45 forecasts, colder temperatures for sort of next week, and also going into sort of the end of March, beginning of April. So we could see storages draw down even more. However, what we can say is, as we know, going back over the years, we do see storages start to fill as we approach the start of the winter season. And this year as well, we won't be seeing €2 per megawatt hour TTF prices this summer. At least I don't think so. It doesn't look very likely. And of course, as well, what we've got to take into account is fuel switching. Last year, we saw extensive demand from the power sector. I think this year, with prices as they are, I think it's going to create a floor for TTF prices. So I don't see us falling too far in the range. And if you look at now, looking at the forward curve, which is still in backwardation, if you look at around Q3, we can see there even the most efficient or least efficient, gas plants will be outperforming the most efficient coal plants. So I think that's a key factor for this summer as well. Also looking at the renewable side of it as well, I think last year we did see quite strong renewables. Wind now, I think we've installed an extra 15 gig this summer for Europe. We have about 220 in total. However, thanks to COVID, we were down about 20% a year. So I think moving through the summer, we also mustn't forget as well Ukrainian storages. We have around 7 BCM, I think, in the non-customs warehouse scheme. And I think once we get a bit later into the summer season, we might see some of the participants start to withdraw some gas. So it's also another additional supply source. One thing we need to be aware of is spreads. Now, if you look at the last few years, the spread between the winter and summer has been relatively stable. That all changed from last year. And as we can see, where we were last year in terms of the spread, we were here around this level. And now we see both contracts are trading higher, which also tells us that there's still concerns moving forward into this winter season, which is obviously when you see storage where it is. So I think keeping an eye on the spreads is very important for this coming summer. Looking at volatility is, let me just get back to that slide. Looking at this is something that's quite interesting. Volatility is definitely on the rise, and we've seen it more so in the last couple of years. What that tells you is the market is tightening. This is increasing the volatility, and obviously we're seeing a decline in European gas supply flexibility. This here is the open high close volatility on the front month TTF contract, and as you can see, we've seen some really strong spikes. Now, I think this is definitely, is it the new norm? I think while we see the situation as it is in terms of the fall in European supply flexibility, I think that will be the case. Obviously, we've got Russia. We're down 20 BCM from there in terms of the drop in supply contract via Ukraine. We are going to see some extensive maintenance this summer as well, which is also, for me, a slight risk. Last year, COVID-19 saw many maintenances cancelled. This year, those maintenances will be taking place, as well as some additional ones. For example, I think the Forties pipeline normally is out for 3-4 days. That's now going to be out for around 19 days. So I think volatility is most definitely here to stay. And just to go back to that last chart, I just wanted to look at the Asian ETF front month. And again, it was relative over the last few years. You've seen it not really show too much divergence, but as we saw that huge rally in Asia over the winter, pushed that up the spread. We've never seen the spread so high. Now we're seeing it, as we know now, it's getting a bit more comfortable. We're going into shoulder season. We're seeing more LNG. I think, like I said, we've got at least another 8 US cargoes or cargoes arriving into the UK over the coming weeks. I think 4 of those have got US molecules. And so far, actually, we've seen 15 in Q1 this year from the US into the UK, as opposed to the 20 we saw in 2020. So we're not too far away. I'm a bit aware of the time here. I think I'm close to the end. One thing I will say is I'll use this slide to end on, because this definitely gives us optimism moving forward that we won't be where we were last year in terms of seeing about 170 cancellations. So if I use this as my finishing slide, then looking at this, then we are going to be in a much better position this summer in terms of we should get those storages filled towards the end of the summer. However, as we know, there are still many risks ahead. So I still think there'll be a lot more volatility and a few more surprises around the corner, as we always expect. And of course, we've got the COVID-19, so it's not behind us yet, but we might start to see uptick in demand over the coming months. But overall, I expect this volatility to continue, and I expect storages and obviously coal to gas switching to provide important signals moving forward. Thank you very much.
Brilliant. Thanks a lot, Wayne. Nice, short and concise. Appreciate it.
Yes.
As we are, exactly. Yes. As we are moving literally to the end of the webinar slot we have, I think let's open up to Q&A, take on as many questions as we can in the next 5 to 7 minutes. And then, as I mentioned, if we run out of time, we will reach out to you with all the questions you've put in and provide you with the answers relevant to them. So I think, JC, probably I'll start with you. One, if you want to just give an overview as a kind of a brief overview comment on the risk side. You've heard the analysis and the outlook that the team has presented. So it might be worth to hear your opinion overall in terms on the risks and what you see going forward. Plus, I would add one more question to it, JC, and then you can kind of combine them into your answer. And this question is about the LNG price volatility. I'll quickly read it out and then I'll pass it on to you. As in, how do you see the LNG price volatility going forward after what we've experienced with JKM this winter, and also in the background of the Texas freeze? Will it remain volatile every winter, or there shall be more stability in 2021-22? Over to you with your espresso, then, JC.
Thanks, Ron. Well, it's been more than 10 years I've been in the LNG industry, and I have to say every year is different, and definitely those 2 years, 20 and 21, are very exciting. The first thing I want to say is the ecosystem is changing. We see new players that is bringing a new generation of traders with new behaviors, more spots rather than long-term, more paper backing the physical deals, and this ends up with more volatility and I would say less predictability for sure. And to answer that question, a good example was the March contract, the March 21 JKM or JKM TTF, squeezed between the February spike, which was physical spike, and the April shoulder month. It has a rational, but then there's also a completely irrational behavior from some people that transpired across the market and across the curve. And volatility has memory, as one of my colleagues here at Outlook says. I think this new ecosystem, this new paradigm is leading to more volatility for sure. When it comes to Texas freeze, that was a stress test for infrastructure. And I started my career as the designer of pipeline grid in France for GRT gas. And you know that covering 1% of extra risk costs you way more than 1% of CapEx expenditure, right? So this is a reminder that infrastructure is a key to harnessing the risks. You cannot leave everything in the hands of the market. That's what I would say about that episode.
Brilliant. Now, That's very helpful, I think, JC. Very good point. And probably, AK, I'll come to you because we have a question connected to this discussion about infrastructure in US. I'll read out the question, AK, and if you want to take it on. The question is, I thought US had no new projects coming online this year, although Calcasieu LNG could come online in October 2021, before it was 22. But how can you have 35 BCM of additional capacity coming online this year from US? And Kat?
Yeah, hello. Yes. To put it a slightly different way, it's not capacity as such, it's production. We are forecasting exports. And last year, we had capacity utilization of 66%. For this year, we expect the utilization rate to increase to 80%. So here there are then two elements. One thing is that last year, we saw an increase in capacity as such. That will contribute to potentially more exports. And the other element is the utilization rate. So in a way, the question is, the one asking it is perfectly right in the sense, no, there will not be much capacity additions. I mean, you had Corpus Christi train 3 starting commissioning in December. So that will be soon fully up and running. So that you can say is a kind of a capacity addition. But it's the export that will increase, which is a combination of capacity added in 2020 and a higher utilization rate. I hope that helped to understand.
Brilliant. That's great. Thanks a lot, Kat. And I know we are literally moving to the last 2 minutes, but when we can't skip you being on a webinar and a question about TTF prices don't come up. So it's just a quick one. Do you see TTF prompt prices collapsing to the lows we observed last summer? When? You might be on mute again, Wayne.
Very sorry. No
worries.
In a nutshell, I don't see such a fall as last year. And many things came together at once to, again, it was like a perfect storm for the bears, really, happening, especially when I mentioned with extensive maintenance. We have less pipeline supply from Russia. We do have a bit of additional supply, of course, and the flexibility of Ukrainian storages. But I think it would need a lot of LNG just to keep on coming, no recovery in demand, and perhaps a very more, should I say, switching than we think. So, no, I don't think $2 is possible. But, hey, you don't know, do you? You just don't know with this market. There's always a surprise, but I'd say it's highly unlikely looking at the curve at the moment.
Brilliant. Thanks a lot. I think we are on top of the hour, so I would like to say a thank you to everyone from our speakers, JC, Wayne, Laura, and Kat. I hope all the audiences found the interaction highly useful, insightful, and we definitely would encourage you all to keep plugged in with all the invites about different webinars and the research that comes out from the Refinitiv team, so that you can always interact with our experts in the future as well. A quick reminder, you have an option about a quick survey in the webinar console as well, where you can let us know direct feedback about the webinar today, as well as if there are any interesting topics that you would like to listen about in the future. And a quick reminder again also about the resources. And if you would like to reach out to any one of our experts, please do feel free to use the survey so that we can interact accordingly. All the questions that we've had, and we've had plenty, so highly appreciate your interactiveness, but we will reach out individually for all the answers so that everyone can get all the answers that they ask for in terms of questions. So thank you again, everyone, for dialing in today, listening into this webinar, and we hope to see you shortly for another opportunity in the future. Thank you and goodbye.